What's going on, guys? So let's try to understand where the next possible pullback is going to occur post March 14th. Okay, because this rally from here, we can count this as 5 ways progression. Now, I am still viewing this as the resumption to the upside, but there is still that slight possibility that this entire structure here, I'm going to highlight this for us, this entire move here can still be a correction. Okay, a correction that is trying to quote unquote correct the entire rally from January to February. Okay, that is still the possibility. So in this video, what we're going to do here, guys, is we're going to review that bullish count and this bearish interpretation, and we're going to see which one of the possibilities, what are the possibilities of each one of these occurring. Okay, so before we dive into the analysis, guys, consider subscribing to the channel and give this video a thumbs up. That's it. I help the channel grow. So on the SPY, on the 1 hour time frame, let's take a look at our main count, which is the bullish count, suggesting that we are going to see, or that we've already within the correct the move to the upside, the breakout, rather. My brain freeze right there. So let's try to review the January 4th to the February lows. Let's try to review this wave structure here, and then we're going to take a look at price action over here, because post January the 4th, this is still being viewed as a corrective move. Okay, a 3-wave pullback, ABC. All right, complex correction, ABC to the X, and then ABC down to the Y, to the wave 4 pullback at 412.71. Now, post February 24th, we get this sort of 1, 2, 3, 4, and 5 move to the wave 1, ABC down to the 2 at 786. Okay, now the next possible resistance zone is going to come towards the 50% retracement at 457, which we're almost close to it, and that comes in confluence with this previous X wave and this high here on February the 2nd, and it's also in confluence between the previous wave A, this pivot point that gave us this push towards the highs here on January the 12th. So this 3 zones, I'm going to highlight this for us, right? This zone here, this zone here, and this zone here is of critical importance because of that reason, right? Because here is acted as support, resistance here. I'm gonna add this one more, resistance and resistance. So it is likely that we see a rejection, okay? And also it is being supported by its wave structure, okay? It is at this point where we're going to determine whether or not, okay, whether or not this is going to be the resumption to the 5th of the wave 5 of wave 1, because what we got to see here, guys, coming out of this wave 3 is a 3-wave pullback to the wave 4, and this wave 4 has to be above this wave 1. Okay, in the closing basis, we cannot retreat beyond the territory of the wave 1 here, because then that'll invalidate this wave structure. So again, let me rephrase this for you guys, and let me review this one more time. Okay, so post March 14th, we have evidence of 5 waves over here. We can count this here real quick, right? 1, 2, 3, 4, and 5. We can see here that we have an ending diagonal. Ending diagonals often occur in the wave 5 position. This is also sustained with the RSI being in negative divergence, right? While price action is making a high, we're having a lower high here in RSI. So we have several evidence here and several key levels and indicators that are letting us know that we are potentially gearing up for a brief pullback, which I hope, because if we retreat more than beyond the 440.96, which is a level that we've been tracking here at Trending Waves for some time now, if we retreat beyond that zone, then it is likely that our alternate count is at play. So what's our alternate count? Our alternate count will look like this. Although it's a bit more extended at this point, I'm not favoring this anymore. But there's still the possibility, okay? I mean, it's my opinion, doesn't really matter. The markets will do whatever the markets are going to do. Our job here at best is to try to have good risk management based on our technical analysis and respect our interpretations here, right? Because we can't force moves. Okay, once again, the markets will do whatever the markets are going to do, but it is up to us as traders and investors to try and maintain discipline, all right, and respect our capital. Because if we don't, then who else? Nobody else, right? So the wave 3 high here on January the 4th gave us a wave 1 down in 2, 3, 4, and 5 to the A wave, ABC to the C. Now, I'm leaving this 1272 external retracement of this wave A to the B. I'm leaving it on there. Although we've been beyond that zone, it is still likely the 1618 is our next target. Okay, so the 1618 and the 786 of this blue degree here, and then the green degree here in the intermediate degree, 786, 464.78, you can start seeing here that is also lining up perfectly with the bullish count, right? These zones here, being that this is the resistance before, resistance here on February the 10th, support here on January the 10th also, okay? And this is also the 1618. So we have this last level of resort that we are going to get, excuse me, that we are going to experience a pullback. So now how deep that pullback is going to come is all going to be, foresee in the next few days, in the next few sessions. So the levels to hold here are the 440 and 434. If we break below, as I have pointed here with this arrow, then it is likely the confirmation comes at the break below the wave A, and then our main confirmation, the last level of defense for the bulls, is at the break of 434.72. So I'm still keeping an eye out for these two zones. It is likely that I am going to take profit on our SPY call that we took a couple of days ago, and our main count here that is suggesting that we have a target of 450. Let me see if I could pull this. Actually, no. I was gonna pull up the trade there, but I'll leave it. Anyway, so our target was towards this $457 region, which we've almost reached. Okay, so it is okay to take profit at this point because our targets have been met. Now, if we do experience a little bit more of a push higher, I don't anticipate this go beyond anymore this zone. I'll be surprised. But if it does, then that's good because it does confirm our bullish count. Okay, otherwise, three-wave pullback, okay, to stay above the 7-8, to stay above the 440. In fact, let's take a retracement, okay? Let's take a retracement here from the low of wave 2 to the high of this possible high, actually. And it is getting a little dicey, right? So what I'm trying to display here is that we must maintain above this wave 1 and the 23.6. 447.17 is our first line of defense, guys. Okay, so let's hop on over to the Qs and let's take a quick look at what those wave structures would look like for both the bearish and the bullish count. So if you guys have any questions, please let me know down in the comment section because I'd love to interact with you guys. Right now, what we're trying to do, let me try to explain again. What we're trying to do is identify possible zones of resistance for the bullish count and possible zones of support for that same bullish count that should hold, okay, should price action remain bullish. Because if it's not, then that's why we have the bearish candle or our alternate count, which would suggest and give us an opportunity to short the market should that play out. Okay, so that's what we'll do here. So the main count in the Qs, same deal, suggesting that post our all-time highs here in December, we have the A, B, C to the W, A, B, C to the X, and then we have our wave Y of wave 4. All right. Once we made a low here, right, we got the wave 1, 2, 1, 2, 3, 4, and 5. So now potentially we have shown divergence here, price making a higher high, okay, and we have two zones that are coming in confluence with wave A, wave C, this previous high here, and the 1618 and the 50% of its lesser degree. Okay, so I am anticipating that we see again a pullback in 3 waves, okay, to pair up with this wave 2 here, coming to support to the 23.6 or 38.2, which we could try to evaluate right now, okay. And so those lines or those fib levels come in confluence with what zones. This is what I always like to do. Once we see a wave structure completed or near completion, we could always take a projection, right? We could always anticipate where a fib retracement can come into, and then we can try to, this is good practice, we can try to take a an extension of this area to see where price action how it behave, and if it's going to be of any significance, and it's going to influence price action. So as you can see here, the 23.6 and the 38.2, this range was of critical support and resistance between let's take a look here, January the 21st and February the 16th. We'll also reacted as resistance here on March the 2nd, and also resistance here on March the 18th, and then support here on March 24th. So this area here that I'm pointing at, guys, it's a good level to potentially take a a look, right? We will evaluate how price action is gearing up when it comes down to this level. We'll look at volume and we'll look at any potential divergence within the smaller degree wave structures, right? Because we have to peel the onion here. All right, as we always review the 1 hour time frame to understand how we can spot divergence in this in the wave C of wave 4. We'll have to dive down to the 15, 30, or even the 5-minute time frame, and that will let us know and give us an idea if we are coming to a completion of this wave structure. Okay, guys, so now let's take a look at our bearish count here, and I'm just gonna delete this. I'll keep it clean for us. So the bearish count here is a little bit more evident that we are not extending as much as the S&P is at the moment. So we have wave 1, 2, 3, 4 to the A, B, C to the C, right? And the wave B. So now this whole retracement comes between the 50 and the 618. Again, same exercise, same deal. This will help you guys take the zone and see where in price history it comes into some sort of confluence with this price structure. So we can clearly see that between this range of 371 and 360, we see the wave 4 as resistance. We see price action hold support here on the January the 10th and so on. So it's good practice. Now, levels to watch here should the market roll over. For confirmation, there's a break below the wave A here at 439, or just for argument's sake, the 436 and 338. All right, guys, so that's good, right? Let's take a good look at these levels, and let me know if you guys have any questions for this. So I want to touch base on the SMH, which is a chart that is giving us good and positive feedback to the upside, because post our March 14th pivot here, we got the wave 1, 2, 3, 4, and 5. So we clearly have 5 waves up, all right, to the wave 1. Now, we can still potentially head on higher, but the way the price structure is setting up here is giving us a good confidence that maybe we see the markets head on higher. However, where it is a little bit of a mixed bag, which I reviewed in yesterday's video, is on the consumer discretionary chart. Here we have price action still displaying a corrective move. Okay, so we are up against the 50% and the 618. And that level, we haven't broken above this pivot here on February the 9th. And that is a little bit concerning to me. Okay, consumer discretionary is about a 12% weighted of the S&P or the SPY ETF. And for that reason, I am looking at this and I am tracking this wave structure for potential pullbacks, because right now we have sort of other names displaying positive momentum to the upside, while we have the XOY giving us some sort of hint as to maybe, just maybe, this is still a corrective move to the downside. All right, guys, so just keep that in mind. So back to the SMH, let's watch for the 275.90 towards the highs here, and also the 1618, anything between 292. But I don't think we'll head up that higher. So for that reason, we're going to take a quick support and resistance, or resistance line here. So 280.19 is our next level to watch, and then also this zone here at 283.88, where wave 5 could potentially come to its completion of wave 1, and then we see a pullback. Okay, guys, and then last but not least, let's take a quick look at IWM, which is lagging right now. It's a little bit tricky here, because if we go up to, let's say, the 4-hour time frame, it's pretty clear, right? This zone that was once a massive support area is now trying to retest as its resistance. So it is likely that we see a rejection, but if we don't, then I expect that the IWM would really do a breakout and then try to take out its November high over here. Okay, guys, so I'm sorry if I'm losing my voice, feeling a bit under the weather right now, but all is good. So again, let's see how the overnight session unfolds, and if we do pull back, let's watch the levels we reviewed. As always, thank you so much for your time, and I'll see you guys tomorrow. Take care. Bye.